Focus. Ideate. Innovate. Enable.
Hello and welcome to this week's episode of Decoding Business Growth Season 2. I'm your host A.B. Ravi. Trailblazer is the word that comes to my mind as I get ready to talk about this week's episode. According to Merriam-Webster Dictionary, trailblazer means a person who makes, does or discovers something new and makes it acceptable or popular. Based on that definition, some of the names of individuals and corporations that instantly comes to my mind are Bill Gates, Steve Jobs, Jack Ma, Google, Uber and Airbnb. Now the whole world is emulating them and good many have succeeded while doing so. In essence, these names are perfect examples of trailblazers. Closer home, the name that crosses my mind is that of Dhirubhai Ambani. He ushered in the equity cult in the country. As an investment banker long ago told me, his is a name that launched 1,000 scripts. Besides, Ambani showed corporate India to think mega by building plants that are world class. Now many in India are following his path. The hero of this week's episode is a trailblazer in his own right. Some 3 decades ago, C.K. Ranganathan started selling shampoos in sachet pack so that people at the bottom of the pyramid would get a taste of best things in life at an affordable price. Cavinkare's success forced MNCs and large companies to emulate his sachet strategy. But like all trailblazers mentioned above, Ranganathan did not rest on his laurels. He transformed his company Cavinkare from being a marginal player in the personal care segment to a full-fledged FMCG company with strong presence in dairy, foods, snacks, beverages, cosmetics and beauty products. Take a look at Cavinkare's story and you know how to be a David in business and beat the Goliaths.
Battling MNCs with deep pockets in the fast-moving consumer goods sector is a tough task. You can only win if you have a differentiated strategy. That's what Chinni Krishnan Ranganathan, founder of Chennai-based Cavinkare, did. He packed shampoos in sachets way back in 1983 when the big players sold it in bottles. This intuitive marketing strategy allowed consumers to buy a high-value product at an affordable price. The result? It allowed Cavinkare to make inroads in the territories dominated by Goliaths like Hindustan Unilever and Procter & Gamble. This move of Cavinkare eventually changed the way shampoos are consumed across the country. Having tasted success, this David of the FMCG sector has transformed itself from being just a marginal player in the personal care segment to a full-fledged FMCG corporation with a strong presence in dairy, foods, snacks, beverages, cosmetics and beauty products. It has in its portfolio popular brands like Chick Shampoo, Spins Deodorant, Forever Cream, Mira Herbal Powder, Indica Hair Dye, Ruchi Pickles, Ma Fruit Juices, Garden Snacks, catering to both the domestic and international markets. But like all success stories, this too had a humble beginning. C.K. Ranganathan was born in Cuddalore, a quiet coastal town in Tamil Nadu. His father, Chinni Krishnan, an agriculturist, was into the pharmaceutical business. He received his early education in a Tamil medium school, unlike his other 3 siblings who went to an English medium school and did well in their studies. But C.K.'s interest lay somewhere else, perhaps in the rearing of pets. And his pocket money came from selling these pets from time to time. Thus was sown the seeds of a future entrepreneur. While pursuing his bachelor's in chemistry, his father passed away. Somehow he managed to complete his graduation in 1982. Soon after that, he joined the family business run by his brothers. They were selling velvet shampoos, but it wasn't a smooth ride. Within 9 months, he quit the family business. With his life savings of 15,000 rupees in his pockets, he decided to branch out on his own. After introspection, he too entered the shampoo business. He quickly rented a house-cum office for 250 rupees per month, leased a factory shed for 300 rupees per month, bought a shampoo packing machine for 3,000 rupees and got the business started. He named the brand Chick, which is an acronym of his father's name.
The sachet idea was originally conceived by my father, and he executed it flawlessly. So I must say that the credit for sachet innovation goes to my father. I built on it. I'm quite happy and delighted the way sachet has revolutionized and created millions of jobs across. That is very heartening. I'm very happy and delighted on that.
In the first month, CK managed to sell 20,000 sachets. This indeed was a good start. Chick's uniqueness, affordability and quality saw the company making profits from the second year. When Chick shampoo entered the market, Velvet shampoo launched by his brothers was being aggressively marketed by Godrej. But CK was unperturbed. He focused only in South India, that too in the rural market where people hardly use shampoo.
Cavinkare as a company has a route to market strategy for both urban and rural markets. And as we all know that we cannot have a single strategy working for both. So with respect to the urban markets, we thrive on improving our direct reach. We focus on improving our dealer per lakh coverage, which is well augmented with the kind of categories which we are present into. So that definitely is winning, cutting edge for us in terms of making the reach going up every different town which we are currently into.
All these strategies paid off, and Chick shampoo became #1 in the South Indian market. Soon, Chick shampoo overtook Velvet. In 1989, Ranganathan renamed his company to Beauty Cosmetics and moved to Chennai. He was hungry for growth, but didn't have the cash needed for expansion. Ironically, it took him about 3 years to get his first loan approved, and today, private equity players are lining up behind his company.
In those days, it was not easy. I couldn't offer any collateral because I walked out of my home without any collateral or anything to offer. I just had 15,000 in my pocket and walked away. So all it was a big turnaround. It took 3 years for me to get my first 25,000 bank loan. That too happened because the branch manager of Vijaya Bank, one Ms. Subramaniam, who looked at my balance sheet and said, "Hey, you are a small company growing well, all those things are fine, you paid income tax. That's surprising." So he took the first risk, and no looking back if you look at me, and 25,000 became 1 lakh, 1 lakh became 5 lakhs, 10, then it became crores.
Ranganathan was clear where he wanted to go. In 1991, he launched Mira Herbal Hair Wash Powder, and within 6 months, this brand captured a whopping 95% of the niche market, with Shaw Wallace left with only 4 to 5%. And then the unexpected happened. In 1993, the then Finance Minister Manmohan Singh withdrew concessions on excise duties for several small companies. And this brought Ranganathan's firm into direct competition with the MNCs.
I think that was a very interesting period. And a very challenging period I had gone through is when the excise duty is taken off, the concessions. So the option before us is that so far we have competed with price points. Now it is not possible. It's narrowed down. And the only question is that it is the innovation that will drive much more innovations, new product developments, and much more quality management will drive us through. And we went on to hire CA, ICW and such kind of professionals for finance, management and so on, and MBAs from IIM Ahmedabad and such kind of things. We augmented all the positions with high caliber professionals.
And from here on, there was no looking back for him. In 1997, he launched Spins Perfume at 10 rupees a pack to cater to the masses who could not afford to buy products in large volume packs. Then he did the unthinkable. He invested about 4 crore rupees in R&D, which was double the size of his profits then. In 1998, the company was once again renamed to Cavinkare to have a gender-neutral appeal compared to the earlier women-centric name Beauty Cosmetics. The name had the initials C and K, which were the initials of his father's name, Chinni Krishnan. Post this strategic makeover and rebranding, the company launched 2 premier brands, Indica Hair Dye and Farever Fairness Cream. In 2000, it set up a division to focus exclusively on export initiatives and ventured into the salon business through Trends in Vogue. Besides growing organically, It also acquired the leading pickle brand Ruchi in 2003, thus making the company's entry into the food segment. In 2008, it ventured into the dairy business by acquiring Prakash Dairy and entered into the coconut oil category through their brand Mira. To further strengthen its position in the food segment, it took over the Mumbai-based Garden Namkeens that make snacks, namkeens and sweets. This period was also marked by new launches. Clearly, Cavinkare is running on full throttle. It is selling over 100 products in 19 countries. All these are reflected in its financials. Its top line has grown from 204 crore rupees in FY 2001 to 1,177 crore rupees in FY 2016, whereas its EBITDA has jumped to 118 crore rupees in FY 2016 from 13.50 crore rupees in FY 2001. On that positive note, it's time for a short break. At the other end of the break, Cnbc Tv18's A.B. Ravi chats with Gautam Benjamin of ICICI Securities to decode Cavinkare's success mantras. Stay tuned. Welcome back. C.K. Ranganathan's sachet strategy has transformed the Indian market and Indians forever. So much so that even the FMCG giants were forced to emulate his strategy. So what keeps him ticking? CNBC TV18's A.B. Ravi caught up with Gautam Benjamin of ICICI Securities to get an investment banker's impression of C.K. Ranganathan and Cavinkare.
Gautam, welcome to the show.
Thank you, Ravi.
Gautam, how is the FMCG sector doing vis-a-vis pharma, IT or other sectors of the economy?
Actually, if you think about it, the FMCG sector has been a consistent performer over the last 10 years. It's delivered growth like 11% over a 10-year period, CAGR. And its prognosis over the next few years is also pretty good. It's expected to deliver mid-teens in terms of growth over the next 4 or 5 years. So I would say over a long-term period, it's been a relative shining star of the economy.
See, the FMCG sector is largely dominated by MNCs and large companies. And also a mid-sized company like Cavinkare, with a sachet strategy, trying to carve a niche for itself. So how do you view their strategy?
If you think about it, the sachet strategy which they came up with maybe 30 years ago was really a novel idea. Apart from the obvious things like convenience and affordability, it also attracted a lot of first-time users who didn't want to invest heavily into a product, and therefore, it was a very attractive option for them. So companies like Cavinkare, I feel, are able to succeed in this market because of a differentiated approach to either product or, let's say, packaging. When I say product, I mean things like, even if it's a crowded market, look for little specific niches where they can play. And they're really looking at strategies which differentiate themselves from the large players to make themselves successful.
Well, the other thing that comes out across this company, Cavinkare, is they have too many products and too many brands. Obviously, it's a flanking strategy, but it also means that they need to advertise on each one of them. So do you think the margins could be under squeeze, and do you advise so many large portfolio for a company of this size?
I look at it slightly differently. I mean, historically they've been an FMCG personal care player, and they're India's largest player in the shampoo space, and they're in other hair care products, etc. In order to achieve greater growth, they've ventured into foods and other areas. And some of those have been through acquisitions. Yes, they are spreading themselves across different products, but these are areas which show high potential in terms of growth and relatively less competition than, let's say, an FMCG play. So therefore, if they get it right in at least some of those areas, I think they have a big winner on their hands.
So in terms of acquisition strategy, is it giving a critical mass to the company, and is it adding to the bottom line and top line also?
It is certainly adding to the top line. I think those businesses have started adding to the bottom line as well. It makes them a more diversified player, both in terms of risk as well as in terms of product portfolio. So eventually, you look at the company as playing across the branded space in the whole fast-moving category, whether it's in personal care or foods or what have you.
So for a company of his size, he has invested heavily in R&D. So looking at his R&D investment, where do you see the company 5 years from now?
See, I think R&D is at the very core of Mr. Ranganathan. From what I understand, I've met him a couple of times, and from what I understand from other people who know him, he's very passionate about R&D. Apparently, he's in the market very, very regularly. Okay. He's always, when he's developing products, he's asking people around him, for feedback, etc. So he's very passionate about the whole idea and idea generation and the creative aspect of things. So I think it's at the very heart of their organization.
Okay, yeah.
So I see him developing products, trying them out. Some will be successful, some will be not.
In terms of numbers, where you see, when you look at the turnover today, where you see 5 years from now?
Oh, I would imagine it will be at least 3-4 times its size.
It could be $1 billion company 5 years from now?
I would certainly think so.
Yeah?
I think it could, in 5 years, it could certainly be $1 billion company.
Do you think this company should go in for listing? Looking at IPO, the flavor of the season, what's your advice would be to Ranganathan?
I think IPO would be a very good option to unlock value. There are not too many FMCG companies that come to market.
Yeah, that's true.
Especially one of scale and of differentiation. So I think if and when he decides to come to market, it will be a very well received IPO.
Okay, Gautam, thanks a lot for being on the show. Pleasure.
Thank you, Ravi.
Yeah.
Well, that was Gautam Benjamin giving us the ringside view of Cavinkare. On that note, it's time for another small break. When we come back, we look at the road ahead for Cavinkare. Stay tuned. Welcome back. Cavinkare has come a long way since the late 1980s when they struggled to secure a loan of 25,000 rupees from the banks. Now, everybody is willing to back CK big time. 3 years ago, in 2013, Chris Capital poured in 250 crore rupees into Cavinkare.
So Chris Capital invests in a few sectors. Consumer is one of the key sectors that we invest in. As you know, the FMCG space in India is a very large market. When we look at investments, we look at industries where there's a big potential for scalability. When you look at FMCG, scalability potential is high. Levels of under-penetration, under usage, I would say, in different product categories is very high. When we looked at Cavinkare, what we found was a company which was a domestic homegrown FMCG company, very strong brands based in South India, excellent leadership led by Mr. Ranganathan, who's a stalwart in the industry. And what really attracted us to this investment was Mr. Ranganathan's passion for the business, his innovation, his ability to come out with new ideas, create new concepts and build strong brands out of them. I think that was what really led us to invest in this company.
Now with the company emerging as a dominant player, Ranganathan has chalked out plans to push the company into new trajectory by moving into premium products. In tune with his new plans, the company's marketing arm has been shifted from Chennai to Mumbai.
Two things that drove us to look beyond bottom of the pyramid is one, the limitations of price points. So when the economy is going through a tough time, when the inflations are high, we are unable to pass on the burden to consumers. 1 rupee is a 1 rupee. If you look at 50 paise, we are the first one to introduce a 50 paise shampoo way back in 1998. Today we are in 2016. Still there is no increase in price. So that has led us to think, okay, the bottom of the pyramid, majority of them are coinage prices. So it is important that we have price points beyond. That is one. The second thing that drove us is the kind of the capability that we have in terms of able to develop products for beyond bottom of the pyramid with innovative ideas. The innovative, when it is innovation is high, even the middle and the high end people also will be able to pay the money.
Apart from developing premium products, the company is also concentrating on having a pan-India presence. And for this, it has restructured its distribution structure and created two verticals, food and personal care products, so that its sales teams can focus better. It is also increasing its brand spend.
5 years from now, Cavinkare will be over $1 billion valuation is what we are looking at. So that's a very ambitious and audacious target. But we believe it is possible combination of few things if you do it right. The other thing I see is a very big opportunity in front of us is the going global in a big way.
Well, in the last 3 decades, Ranganathan, through his drive, ambition and passion, made Cavinkare a formidable player in the FMCG space. If the current trend is any indication, then this Desi company will cross many milestones and in the process give MNCs a run for their money. In essence, Cavinkare is a company that very much fits into Prime Minister Narendra Modi's vision of Make in India.
Well, that was C.K. Ranganathan talking with conviction as to how Cavinkare will be a billion-dollar company over the next 5 years. Going by his past track record, I'm convinced he will hit the magical mark. Well, with today's show, we come to the end of our 9-episode journey of Decoding Business Growth Season 2. In the past 9 weeks, we went across the country looking for tomorrow's leaders. We were quite fortunate to discover and meet an eclectic mix of achievers. The idea of focusing on unlisted companies is to help potential investors take informed decision on these successful companies should they go for an IPO listing. We feel that some of them could well become tomorrow's Infosys and Sun Pharmas. On that note, it is time to say goodbye from all of us here in this studio. But keep watching Cnbc Tv18. We will be back with Season 3.
Focus. Ideate. Innovate. Enable.